their loans are called euro credits. So European countries, they should borrow in euro because their currency is euro, but they are asking loan in dollars, so that loan is called euro credit. So remember, that doesn't mean, so many students are confused that here there is no dollars, it means they are asking loan in euro. No, that is dollar denominated loans in Europe by the countries, so we call this euro credits. So normally the interest rates are based on LIBOR, which is lender interbank offer rate. So why, the the European companies or governments, they ask loan in Europe? Because dollar interest rate is much more stable. Why? Because it is linked with LIBOR. So LIBOR is the interest who announces interest rate. For example, 3 months interest rate, 4 months, 5 year, 3 years. It's much more stable. And if they ask loan in euro, so their interest rate also depends on European market conditions, European countries condition, economic condition as well. So normally the dollar conditions are more stable, and history proved that one. So in order to have plan, better plan and to have forecasting, so they want to base their analysis, they want to go for dollar loans. In that case, their basically planning is going to be fulfilled, plus interest rate does not fluctuate as well. Guys, just stay with me, we are just 1 or 2 slides to finish this one. I'm sorry to take you 2 or 3 more minutes, please forgive me. So regulations in the credit markets is just every country has its own Basel Accord and Currency Act. So I'm just going to read it. This is just for your knowledge. So European Act was that when you go for single European Act, what happened? So any country that is a part of Europe and European Union. So we said, they said that we make a one currency for each other. In that case, they eliminated interest rate risk and currency flow and exchange rate risk from one country to another country in European Union. So this case, they eliminated the possibilities of like shortages of funds, higher interest rate, this kind of stuff. Basel Accord Agreement. So Basel Accord Agreement is for banks. So normally, how banks are established, where I can write. So depositors deposit the money, banks lend the money. So depositor and banks lend the money. So the Basel Accord Agreement is is like that in order to protect the rights of depositors. Right? Depositor deposit the money and banks will give them 5%. But when they lend it to the companies, they charge 15%. 10% is just profit, and this money belongs to depositors. So plus there is like a competition among the banks to lend the money because they want to exploit this 15% and they want to maintain 10% or increase more profits. So they loan the deposited money to some institutions who are having a bad credit. So in that case, they who loses? Depositors, because depositors save with the bank because they know that the bank is backed by central bank, and they save their money. But what banks management do? They say lend the money to some bad companies who lost their monies and they are unable to pay back the money. And when depositors demand their money, banks don't have the money. In that case, the Basel Accord Agreement says that bank also maintain their capital as well. So previously, deposit the money, and money is going to be lent out. And now the banks also maintain 4% of their assets as well. It means if bank has $1 trillion, then 4%, which is $40 billion, must be in their capital, or bank must issue $40 billion worth of shares to the, you know, or they have their own money to give the loans. It's not like that you save your own money, you lend your own money to a safest companies, and lend others money to some very risky customers, risky companies who don't pay you back. So this creates more equity and justice, and that's it. So you see, only 4%, because banks deal with huge number of money, billions of dollars, right? So it's just for your uh, understanding. Syndicated loans in credit market. So syndicated loans are, if a company needs $100 billion loan, so a syndicate is made, which means a pool of banks will made. Okay, one says, okay, I will be contributing 30 billion. Other says I will be contributing 20. The other says, okay, I will be contributing 25. So in that case, a syndicate is, you know, a syndicate is is basically made, and that bank who contributed the more, right? We basically they are the major contributor contributor to this loan. So you can say that they can have their own negotiation power as well. So sometimes a single bank is unwillingly or unable to lend the amount needed to the government or big multinational companies. So a syndicate of bank can be formed to underwrite the loans. The leading bank, so that contribute the most, he is responsible for negotiating. Okay, how you are going to pay us our principal and interest? What would be the interest rate? I am contributing my more money, so I would be receiving more interest rate, right? Those who are contributing less, they would be paying less. So it depends upon the risk and return characteristics. So impact of the crisis on the credit market, we already know that when 2008 crisis triggered, many people lost their jobs. When they lost their job, they couldn't pay their mortgages. In that cases, mortgages are bought by the banks, and bank could not receive the money, and they could not pay back their deposits to the depositors. So that in that sense, people lost their spending, their saved income as well. So that triggered a chain effect, and we saw that the world was in great depression. So the financial institution must be very cautious when they lend their funds to, especially the MNCs, because people are working for MNCs, they receive money and they save money with the bank, and bank loan the money to MNCs, right? So this also creates a chain effect. People working for MNCs, they receive salary, they saving with the bank. This is saving with the bank, and bank loan to the same MNCs, big MNCs. In that cases, if MNC is unable to pay, and how they pay back the salary over there, people lost the job, people lost their savings, and they are in vulnerable conditions. That's why we must say that the credit crisis is going to be impacted both income, spending, and jobs. Okay, how many left? Okay, only a couple of slides left. Okay, international bond market as well. We have foreign bonds, which are issued by borrowers to country where the bond is placed. For example, if Chinese people, they issue their, I think we should stop here and we will be continuing our discussion from here in our next class.
Sir, I mean, I understand bonds policy and how does it work. It's like you have a loan with government directly. So the government issue bond. My question is regarding to the former way, is there any way that we buy as much as possible, for example, pound, livre sterling, UK money, and we use this amount in UK money to issue different loan or to buy loans in different other currency? Because as I understood, it's like you look for the most exchange rate power, and then you release loan, kind of.
So, you know, the amount of the loan, it's not just depends on, okay, how much money you want to have loan. That's it. You go to the other countries, but there are also quality checks as well, plus your capital structure as well, plus your needs as well, plus your history of reputation as well. So it's the same way. If your friend asks money from you, there are a number of factors that you can trust him or not. His history, his performance, his ability to pay back. This kind of stuff is embedded in the decision making as well. But that person has also a chance to either loan money from you or his girlfriend or his family members or his friends or through banks or through offices. It's like that. So company has a chance to ask for loan either from home country's bank, either from abroad, either from even your employees as well, or from the public. So this is just for the management of the funds. Right now, what we are just having overview. If we go deep into details, we will be having a lot of subcategories of this kind of stuff. Florian, you understand my point?
So the easiest way is like, if you want to be able to do this, you must do, I don't know, an offshore online business where you receive money from your customer in pound, and you do like an account online in pound, and then you use this account to like a regular UK citizen, kind of. That's what you mean?
I think I don't understand your question. Okay, let me finish this class, and after that, we have more time to have discussion. Okay, Florian, just wait after my call. Okay, so class, I'm just going to end my discussion here. So the international bond market, we will be touching this concept in our next class. So if you have any question regarding what we have learned today, please do message me in our WeChat group, or you can also message me on my personal WeChat as well. I will be happy to answer. And I'm really sorry to extend our class for 10 more minutes. So I really apologize for that. Okay, if no more questions, then I'm going to be stop recording this lecture and I'm going to say bye-bye.
Bye, sir.
Thank you. Thank you.
Thank you.
Stay safe. Take care. Bye-bye.